Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited, grateful for life to be with you here this morning as we are going to be taking another fresh new look at the financial market. Um, hold on a second. Hold on a second, please. Let me sort this out quickly. All right. Like I said, I'm very excited to welcome you again to yet another promising edition of the Forex Morning Mastery. My own name is Sheriff Daramola, and for the next 30 to 40 minutes, I'm going to be your host as I will be taking you on a trading journey where we shall be delving into the financial market using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of all of the assets on our watch list for this week. Well, since the beginning of this week, we have been monitoring three major financial assets, which includes the US CPI, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, though the week had started on a very sluggish note, but finally, in the last 36 hours, we begin to gain some positive traction, and in that regard, we've been able to scoop in some significant amounts of profit on all of the assets on our watch list for this week. So in the next moment, we are going to be delving into the charts to see how we are going to be managing our positions while we also strategically position ourselves ahead of the London and the New York session today. So I encourage you to stay tuned in so you don't miss out on any of these insightful ideas we shall be talking about today. For those who are joining us for the first time, you're highly welcome. I'm always grateful and glad to have you around with us every morning when we start. So you're welcome on board, and I do hope that you are going to be finding the session helpful. Well, what we simply do here as technical traders is to come together on a daily basis where we come to review our existing positions, if we have any, and use the information we identify on the charts to strategically position ourselves ahead of both the London and the New York session. So this happens on a daily basis, 9:05 a.m. West African time, 8:05 a.m. UTC. So I implore you to stay tuned in so you don't miss out on any of the ideas we will be talking about today. And of course, I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how our strategy works and eventually be able to use the information you gather here to make your own independent trading decisions. So here on the Forex Morning Mastery, we usually focus on the 1 hour time frame, which is our execution time frame. So it's like a follow-up detail to the analysis I shared during the course of the weekend. So it's always important you go through my analysis during the course of the weekend so you can have a background knowledge of what we are going to be talking about during the live session. I have the links to all the videos of the asset I shared during the course of the weekend right in the comments. It's already in the description box of this current video, so you can check them out after the live session. And not only that, it will help you have a background knowledge, you can also use it as an educational tool in helping you finesse your proficiency in price action. So once again, you are highly welcome on board. Now, with that being said, here we shall be delving into the business for today, and as usual, the first thing we usually do here is to check on the economic calendar. And for those who have been with me for a while now, you know how important checking the economic calendar is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, which hereby gives us the information needed to make us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact events. So let us filter in high impact event. And of course, we focus on economies that affect the assets on our watch list. So for this week, we are looking at the United States and the United Kingdom economic docket. So we want to include this into our purview. So I will remove all these ones. So these are not included in our asset for this week. Then the impact of this event, we are going to be looking at high impact event, of course. But for today, I want us to include the medium impact event due to some features coming in from the United Kingdom, which of course are going to be affecting the price movement for today. So medium and high impact event, then let's click on the apply filter. So here we go. Let's wait for it to load up. All right. So here we go. So today is Thursday, October 12th. And hold on a second. There's still some event that happened earlier today. So let me include this week in general. All right. So, okay. So here we go. So for Thursday, October 12th, we have a handful of events we are going to be looking forward to from both the United States and the United Kingdom. So this morning, about 2-3 hours ago, we had a couple of events from the United Kingdom, which include the gross domestic product, the industrial production, and the manufacturing production. Now, the good news from the United Kingdom is that there was an expansion of 0.2%, just as expected, compared to the previous month, which came in at minus 0.6%. So it's quite a significant development in the United Kingdom's economy, which is a very good sign for the pound sterling. And of course, we saw the industrial production and the manufacturing production, which gives us an insight into the manufacturing sector of the United Kingdom. But the figures that came in here were not that impressive. So we are going to be looking at how the market has reacted to this event and how we want to be positioning ourselves as we look forward to economic features from the United States much more later today. Then in about 3 hours from now, we are going to be looking at the consumer price index from the United States economic docket. Now, for those who don't know, this is it measures the inflation. This data here, I mean the consumer price index, it measures inflation and impacting the purchasing power of consumers and influencing market expectations about central banks' policy and interest rates. So this is one event majority in the market will be looking forward to. And of course, the Fed's Reserve will also be looking forward to this, as this will be deciding if they are going to be increasing interest rates or not. And from generally speaking, a high reading here is considered as positive for the US dollar, while a low reading is considered as negative. Now, if we look at what the data here is saying, that is the consensus for both the month-on-month, the year-on-year for all these events, you will see that it's a little bit lower than the previous month. So the consensus here is that there is likely going to be some contraction in that regard, which is not going to be a good sign for the US dollar. And if this is going to be the case, I think we begin to see some reflection of this idea in the market, as we've seen so far this week that the dollar had continued to nosedive to the downside. Could it be a retracement, or is it going to be the beginning of a huge sell-off? So we are going to be looking at the US dollar on that one and how we are going to be positioning ourselves for today. Now, we also have the initial jobless claims, which will be published simultaneously with the consumer price index, of course. And for those who don't know what the initial jobless claim is, this is an index released by the US Department of Labor, and it is the measure of the number of people filing first-time claims for state unemployment insurance. And in other words, it provides a measure of strength in the labor market of the United States. Now, a larger than expected number indicates weakness in this market, which influences the strength and direction of the US economy. So in this regard, if we are seeing something larger than expected, then we should be expecting a contraction for the US dollar. Now, if we look at the previous data here, it came in at 207,000, and economists are projecting a 210,000. So it's a sign here that we might likely be seeing some contraction in that sector, which of course is not a good signal for the US dollar. So we are going to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Then lastly, for today, we are going to be looking forward to the monthly budget statement, and this summarizes the financial activities of the federal entities, disbursing officers, and Federal Reserve banks. Now, a positive budget statement that receipts exceed budgetary outlays is seen as bullish for the US dollar. Now, it doesn't seem things are going very well for the United States economy right now. As you will see, the previous data here came in at $89 billion, and there is a consensus projection of a deficit of $78.6 billion, which is not a good signal at all. So despite that, we'll still look forward to the actual data. Will it be just as expected, below expectations, or even beyond expectations? Now, one thing here we need to understand here as technical traders is that the anticipation of this event alone always has a tendency of influencing market sentiment, which dovetails to the price action. Now, what we are going to be doing right now is to go back into the charts. Let's sniff through the current market structure to look out for ways to which we can position ourselves in such a way that we can capitalize on any potential move that happens today. So talking about price action, we shall be diving right into the charts. I see your comment, Ika's Diary. Good morning to you. Glad to have you around with us this morning. And with that being said here, so the first asset we are going to be looking at this morning is going to be the USOILSPOT. And after a long wait on the USOILSPOT, we waited for Monday, Tuesday, and finally yesterday we saw some traction on the USOILSPOT market, which we of course took advantage of. And we saw how price nosedived to the downside yesterday, giving us about, how many pips was that? We saw price move over 200 pips to the downside in that regard. And for those who took advantage of this opportunity, well done to you for being on standby to capitalize on this move. And for those who are with me on both my TradingView and Telegram platform, you'll definitely have gotten an update on how we are going to be managing our positions today. And one of the things I mentioned in my commentary this morning is as regards the collaboration, the Saudi Arabia's collaboration with regional and international partners as to how they are going to be preventing further escalation and maintaining market stability. That's what they said yesterday. And because of this hope that the supply of oil might not be affected due to the crisis in the Middle East at this point in time, I'm of the opinion that we might likely be seeing some positive traction in that regard. And if you look at the current market structure, that is on the chart 1 hour time frame here, you will see that we are beginning to see some bullish traction in that regard. Now, if you still have a sell position right now, personally, I'm already out of this trade, but if you still have a sell position right now, it is very prudent that you move your stop losses and secure this position, or probably get out of this position right now. So with this being said here, let's look at things from a technical standpoint. Now, I would like us to look at how the week started for us here in this community and what led to the idea of selling this asset before we jump into what our plans are for today. Now, if you look at the structure here since the beginning of this week, it was quite clear that the market was more of indecisive. As you will see, that price action was confined within a range here between the $85.15 level and of course the $83.80 area to emphasize the level of indecision in this market. And of course, you know how we do it in this community. When price action falls into this kind of range, we have no other choice than to exercise patience, waiting for either the breakout of the resistant line of that range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. And something interesting happened yesterday. I think a couple of hours into the New York session, we saw price broke down the support line of that range, did a retest of structure. If you had missed out on the first position, price did come back, do a retest of structure, and since then we saw price nosedive to the downside. Now, with the way things are going right now, what is going to be our plans for today? Now, I would like to refresh our memories as regards to the descending trend line we spotted at the beginning of the week. Now, what we did here was to take into consideration the nature of price action since the beginning of this month, and it was quite clear that price action had continued to find lower highs in this market. And when we connected the series of lower highs here, we had this descending trend line to work with. And interesting enough, at the beginning of this week, we saw our price broke out of that descending trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. So we saw this breakout happen here. Price went through a consolidation phase, and you all know that when price breaks out of a key structure such as the descending trend line we have here, we expect at some point in time price will come back to retest the structure in anticipation of an uptrend continuation. Now, if you look at what has been going on here in the last let's say 10 to 12, 15 hours now, you will see that as soon as price tested that descending trend line, we begin to notice some buy pressure resume around this area. Now, this for me is a red flag that buyers are likely coming in, and that is simply why I said we should either be getting out of our sell positions right now or move our stop loss, secure the current positions while we wait for an opportunity to join this uptrend move. Now, for those who took advantage, because I got some messages on my private box that they bought above the $82.25 level, it's okay if you had bought above the $82.25 level. That's very good for being on standby to capitalize on that move. However, I personally missed out on that opportunity, and what we are going to be doing here for all of us who had missed out on this opportunity is to exercise patience and wait for price action to give us a new setup that we can use to join this uptrend move. And one of the things I want to be looking at here is price coming back to retest this $82.25 level. So if I can find a retest of structure, then I will be willing to be ready to capitalize on that uptrend move. Now, what happens if price does not come back to retest that structure? Well, that's a beautiful question if you will ask me. Well, if you look at the structure right now, we have a level around the $83.15 area, somewhere around here, $83.50 area. I want to see how the market participant will be reacting to this price level. That is the $83.50 area, 15-cent area. Let me highlight this on the chart so that we can have a visual understanding of what we are talking about here. So we have the $83.15 level mapped out on our chart now, and if you look at what has been going on along that $83.15 level since the New York session yesterday, we saw the breakdown of that structure, we saw price came back to retest the structure to incite the downtrend scenario. And right now, price action is gradually approaching that level. In fact, it's around that area right now. So I want to see how the market will react to this level. So if selling pressure comes in again, then I want to see it drop into the $82.25 zone, where I want to be looking out for signs that sellers are finding it difficult to drop further to the downside, which will reflect on the chart as buy pressure. Then we want to be part of the uptrend move. That is one way to capitalize on this one. However, if price breaks out of the $83.15 level to the upside, then I want to be looking forward to a retest of structure to join that uptrend move. Now, there are two ways to which you can capitalize on this breakout here. That if you have been part of a profitable trade since the beginning of the week, then you can afford to have your buy stop order above the $83.15 level. In fact, for those who had bought early enough this morning, you can afford to have your buy stop order above the $83.15 level. You will only be leveraging on the profit we had made so far this week. But if you're not and fresh with us here this morning, then you want to be waiting for a retest of structure for confirmations to join that uptrend move. So on the US All Spot today, I'm looking forward to a bullish momentum here. So all we just want to be doing right now is to exercise patience and allow our structures to mature before we jump into any buy positions around here. And trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. Then another thing I would like to emphasize here, based on this structure, which further buttresses the idea of buying this asset, is how price action may gradually transition into a reversal pattern here. Now, if we consider this impulsive move into the structure, price came back into the $83.15 level. I'm beginning to see something like a head and shoulder pattern, inverse head and shoulder pattern, where this fall here will be the head and the $83.15 level will be the neckline of that reversal pattern. And we want to wait for the transition of the right shoulder to form, and then the breakout retest to emphasize the uptrend scenario here. So things are looking very bullish sort of a thing right now, especially after retesting that descending trend line. So let's see how the market will play out around this area. So I hold on to a bullish bias. And if you would ask me that what about this seller's consideration at this juncture, I really do not see any at this point in time. But for me to sell, then I would want to see price drop back below that descending trend line, that is sliced through the descending trend line, after which I want to consider us being in the seller's territory. But I doubt if this will happen today. But if it does happen, we want to be on standby to capitalize on that move. So these are my views here on the US All Spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, I see your comment here, Ika's Diary. I just hope I pronounced your name correctly. Don't mind me if I murdered your name. So you are asking that I should explain how the $83.15 level becomes a key price. I think I did that earlier, so I will do a quick recap of what I said. So I said here that if you look at how the market has reacted to that price level since the New York session yesterday. You will see the first reaction we saw yesterday was the breakdown of the $83.15 level right here with an engulfing bearish candle. Now we saw our price came back to retest the structure here to incite the further downtrend. So let me give a visual representation of what I'm talking about. We saw the breakdown of the $83.15 level. We saw price come back into the structure, and the inability of buyers to break above that area further emphasized the strength of the sellers there, pushing price back to the downside. Now, price is gradually approaching that level again. In the last 1 hour right now, we have been seeing price moving close to that level, and at this point in time, we want to see how the market will react to this level this time around. We saw what happened yesterday, we saw what happened this morning about around that level, and right now we want to see how the market would react to that area. So like I was saying earlier, we have this potential of price action transitioning into an inverse head and shoulder pattern where we could see some sell pressure resume one more time into the situation before the breakout of that structure happens, where the $83.15 level will be serving as the neckline of that reversal pattern. So that is why I said that area will be serving as a key level for today. So I do hope I made myself very clear there. Hiker's Diary. So please let me know if you still need further clarification or what aspect of my explanation you think you need me to do further clarification on. So with that being said here, and in the absence of no questions, I want to assume that we are all on the same page here. And in that regard, permit me to move on to the next asset. If you still have questions, feel free to drop them in the comment section. So moving on right now. So the next asset on our watch list for today is the GBPUSD. Now on the GBPUSD, we had this, we have been buying since Tuesday's trading session. I think since Monday, we've been buying since the beginning of the week. Though we had a situation where we sold at the beginning of the week, where this descending trend line was our yardstick for guiding our trading decisions. And we agreed on Monday that as long as price remains below that descending trend line, we continue to hold on to a bearish bias. But if price breaks out of the trend line, then we get ready to join a bullish move. And of course, we saw what happened after price did break down the 1.22020 area. We sold, we moved our stop losses accordingly, and as soon as price broke out of that descending trend line, it was just a sign that the trend line may no longer be able to hold on to the negate the bullish attempt around that area, further signaling that bullish move. And in the last 2 to 3 days now, we had this ascending trend line which we identified here and has been supporting this bullish momentum since the beginning of this week. So this trend line here has played a major role in guiding our trading decisions so far. And for those who are with me on both my TradingView and Telegram platform, I did mention here this morning that we want to be moving all our stop losses to secure this current position as we begin to notice some selling pressure evident around that psychological level at the 1.23400 level, indicating some resistance from sellers at this point in time. Though we had some positive data, the GDP data from the United Kingdom came in very positive, but the manufacturing sector, the industry sector wasn't doing very, very well. And we want to see how the market will be reacting to this mixed data coming in from the United Kingdom. Now, from a technical standpoint, let's look at what the structure is saying. So currently we have about 1, 2, 3, 4 buy positions running here. Remember, we took advantage of the first buy position at the breakout of the 1.2200 level. We added more positions at the breakout of the 1.2236 and of course the breakout of the 1.22650, and finally the breakout of the 1.2300 area during the New York session yesterday. So we currently have 4 buy positions running, and I told us this morning that we should move our stop loss. And for me personally, I will be asking you to have your stop losses around that area, around the 1.22800 level. Of course, we do want to be given enough room for price action to breathe. Now, with a well-secured position at this juncture, what is going to be our next line of action? Are we going to continue buying, or are we likely going to be seeing some bearish momentum that could incite a sell-off in this market? Now, let's talk about the potentials of sellers here and what are the conditions that will make us want to feel confident selling the GBP USD. Now, look at the structure closely. Remember, I told you we had this ascending trend line which has been supporting this bullish momentum, and at no point in time have we witnessed the breach of that ascending trend line. Now, if we are going to consider selling today, we want to see price break down that ascending trend line. Now, look at what has been going on along the 1.234 since the New York session yesterday. We saw the first attempt by the buyers to break out of the structure, which was met with strong resistance from the sellers. And a couple of hours ago, we saw after the GDP and the manufacturing sector data came in from the United Kingdom, we saw continued selling pressure around that area as buyers were unable to even get close to the 1.234 area. And following that, we saw an engulfing bearish candle, bringing price back into that ascending trend line. So right now, price action is trading around that ascending trend line, which interestingly shares a beautiful confluence with the 1.2300 area. Now, with this confluence we have here, you would agree with me that we are at a crucial juncture in the market right now, where depending on how price reacts to this level will determine the direction of price action for today. Now, if we are going to be considering selling here, I want to see price break down both the 1.23 and the ascending trend line. This will be the first time price will break down the ascending trend line, giving us a signal that we might likely be seeing a momentum shift, retest of structure for confirmation, then we can join the downtrend move. Now, if you were with us on Monday when we were talking about the bullish momentum we saw here since last week Tuesday, remember we had these higher lows here. There's the first one right here, the second one here. We had a third one right here, giving us this major ascending trend line here. Now, if price action does break down and retest that ascending trend line here and the 1.2300 area, we might likely be seeing a move back into this ascending trend line, which will be dovetailing to approximately 100 pips, probably in anticipation of another uptrend scenario. And in fact, if price does break down that ascending trend line, we will be looking out for more selling opportunities to maximize the potential of that bearish move. So at this point in time, with a continued selling pressure around the 1.234 area, a breakdown retest of that ascending trend line and the 1.23 area will be inciting some selling opportunities here. Now, if this continues to the downside, then breakdown of multiple levels here, like the 1.22650 level, the 1.22360 and the 1.2200 area, which lines up with that ascending trend line, will be welcoming more selling opportunities. But most importantly, if the sell momentum continues to the downside, as soon as it gets into this ascending trend line, we want to exercise patience and see how the market would react to that structure to decide if we are going to be adding more sell positions or get ready for another wave of bullish momentum. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates at this point in time. However, if the breakdown is being negated, that is the breakdown of the ascending trend line and the 1.2300 area is being negated and price continues to the upside, the only condition that will make us want to be adding more buy position here is for price to break out of the 1.234 retest of structure. Then we want to be joining an uptrend move there. So these are my views here on the GBPUSD, and to simply put, our center of focus for today is going to be between the 1.234 and the 1.2300 area, where depending on how price reacts to the structure will be determined what our next line of action will be. So let's keep this in mind. Let's mark these levels out on our chart, and let's continue to monitor price action for new trading opportunities. So I don't know if you have any questions or you need me to do some clarifications to my explanations, or there is an area you want me to shed more light on. Feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you also take that time to mark out these levels on your chart. All right, so I see your comments, Ika's Diary. All right, I'm very glad you found that helpful. Okay, you are very much welcome. All right. So in the absence of no questions, if you still have any, please drop them. I will be checking the comment section from time to time. So at this point in time, in the absence of no questions, I want to assume that we are all on the same page, and I will be moving right into the next asset, which of course is the last asset on our watch list for this week. So the next asset on our watch list for today is my favorite, the XAUUSD, popularly known as the gold spot. And I can say for sure that the XAUUSD trade appears to be the most profitable trade amongst the assets on our watch list for this week, as we have been buying since the beginning of the week, and along the lines I've scooped over 500 pips from 3 buy positions running at this point in time. And of course, the varied comments from the Federal Reserve officials regarding inflation risk and policy measures have compelled market participants to allocate their capitals to safe havens such as the gold, the silver, such safe havens like this. Remember, we had the Fed minute published yesterday, and this was no ball at all, no confidence for a further interest rates increase at this point in time. So everyone is still looking forward to the inflationary data, which are coming up much more later today and tomorrow. That is the consumer price index and the producer price index, which will be coming up tomorrow too. So let's see what happens. That's what majority are looking forward to. But at this point in time, the gold is looking very bullish at this point in time. Now, one thing I would like us to do now is to run through how the week started for us here, and then let's see what our next line of action will be. So at the beginning of the week, for those who have not watched my video on the XAUUSD, please do watch my video. I did a top-down analysis from the daily time frame to the 4 hours time frame, and how we are going to be getting ready for this week's trading session, and the key levels we identified there. So you want to be watching that video. The link is right in the description box of this current video. So watch it after the live session so you can understand how we got to this point. So at the beginning of this week, it was a simple setup we were able to identify here on the 1 hour time frame, and that is this range where price was confined within the 1,885 level and the 1,846 area, giving us an insight into the level of indecision at the beginning of the week. And of course, you know how we do it in this community. When price action falls into this kind of range, into this kind of uncertainty, we had no other choice than to exercise patience, waiting for either the breakdown of the range for an opportunity to sell or the breakout of the range for an opportunity to buy. And of course, we saw what happened here on Monday. Price did break out of the resistance line to trigger our first buy position for the week. And for those who missed out on that opportunity, we saw how the market came back, retest the structure, and boom, the uptrend continuation happened. So we had about 3 positions. We had the first position here, had the breakout of the 1,885. We had the second position triggered at the breakout of the 1,865. That was yesterday morning. And during our live session, during our XAUUSD live window, which we always monitor on this platform, during the New York session yesterday, we anticipated another breakout of the $1,874.70 level. So on the XAUUSD so far, we have about 3 positions with over 500 pips running in profit. And for those who are part of this profitable journey, well done and kudos to you for being on standby to capitalize on this move. And for those who are with me on my TradingView and Telegram platform, I already shared an update with us this morning as to how we are going to be managing our positions for today. Now, the first prominent structure here is the ascending trend line we identified here at the beginning of the week. Now, after connecting the series of higher lows, remember, we had this ascending trend line figured out, and this is going to be playing a major role in guiding our trading decisions for this week. And what this simply means is that as long as price remains above the ascending trend line, we shall feel comfortable in our buy positions, while we also look out for more buying opportunities on this asset. Now, where price is right now, we already have a new level at the $1,882.50 level. This is the highest point price action has been for this week, and in fact, we saw some selling pressure resume around that area. Now, the question going into the London and the New York session today is that will price retrace back into the 1,874 level, where it also shares a confluence with that ascending trend line to anticipate an uptrend continuation. So that is one scenario we are looking at today. So if the selling pressure persists below the $1,882.50 level, then we shall be looking out for buying opportunities around the $1,874 area. It's $1,874.50 level, which interestingly shares a confluence with that ascending trend line. So if we see buy pressure around that area, double bottom structures, head and shoulder patterns, then we want to be part of an uptrend move. However, if price does not drop to the downside and instead continues to find higher highs, leading to the breakout of the $1,882.50 level, then we want to be joining the uptrend move. Now, there are 2 ways to which you can capitalize on the breakout of the $1,882.50 level. For those who have been part of this community for a while, you know how we take advantage of this opportunity. I will run through that quickly again. Now, for those who have been part of this profitable journey since the beginning of this week, that is, if you have joined us since the beginning of the week with the multiple entries we have, then you have a lot of profit in your kitty, so you can afford to leverage on the profit we had made so far this week and risk a breakout of the $1,882.50 level. So placing a buy stop order for you seems more reasonable, and if it doesn't work, then we know that we are just risking some of the profit we have made so far this week. However, if you are new with us and this is going to be your first time taking a position with us on the XAUUSD, then I will suggest and encourage you to exercise patience, where you want to look out for the breakout of structure happen, wait for price coming back to retest the structure before jumping into any bullish momentum here. So this is how we are going to be managing for the higher highs and higher lows from this current structure. So those are the two scenarios we are looking at. We are looking at either the breakout of the 1,882 or price retracing back into the ascending trend line to incite an uptrend continuation. However, if the contrary happens here and price action continues to drop to the downside, you know how we do it in this community. We also want to keep tab with the opposite direction too as well. So in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers too. And if we are going to be selling the XAUUSD today, what is it that we want to see on this chart that will make us feel comfortable or confident abandoning the bullish idea and coming in for the bearish setup? Now, for us to sell the XAUUSD today, I would rather want to see price action slice through both the ascending trend line and the $1,874.50 level. Now, if price breaks down this ascending trend line, this will be the first time price will be breaking down this trend line since the beginning of the week, which is going to be a significant feat, as the breakdown of the structure will be a sign that the trend line may no longer have the capacity to continue to negate the bearish attempt. And if this happens, we are not getting too excited. Remember, neither are we having a sell stop order below that structure, as we want to wait for confirmations before we jump into the sell positions. So we want to see signs that buyers are finding it difficult to climb back above the ascending trend line, which would reflect on the chart as price retesting the structure with continued selling pressure below the structures on our lower time frame to join the downtrend move. But personally, I doubt if any selling opportunity will come today, considering the crisis happening in the Middle East, as majority of the key players in the market would rather want to be putting their funds in safe havens such as the gold instead of currencies instead, because it's a very volatile environment right now, and putting your funds in gold looks much more reasonable within this economic turmoil at this point in time. But if a breakdown happens, then we have no other choice than to get ready to sell the assets. So these are my views on the XAUUSD for today. I do hope I made myself very clear, but if you still have any questions and you need me to do further clarifications or explain some things further, please feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so I see your comments, XAUUSD again. If we are entering for a buy entry, do we need to wait till the price break 1.234 and retest it? XAUUSD, I think you're talking about the GBPUSD. So let me go back into the GBPUSD, and I think I explained this very well. So you said 1.234, like I said, depending on where you are with us in this community, for instance. So if you have been buying the GBPUSD since the beginning of the week, definitely you must be in profit right now. So having a buy stop order above the 1.234 is something you want to be doing, as you're only risking some of the profits you had made so far this week. And if it doesn't work, you know that you are not eating into your portfolio at all. You are only eating into the profit you had made so far this week. But if you are new and this is your first time buying the GBPUSD, then you want to wait for a retest of structure to happen. So this is our rule here in this community. If you have been part of the profitable journey so far, you can easily place your buy stop order, because the risk is less for you, as you're only going to be risking out of the profit you had made so far. But if you are joining for the first time, then definitely you want to be waiting for confirmations before you jump into that position. So I hope I made myself clear there. Ika's Diary. If you still have questions, please let me know in the comment section. So I just dropped the link to the XAUUSD live window right in the comment box. So you want to click on that link, click on the notify me button so you can get notified as soon as I come on live. The XAUUSD live window is a platform that was born out of a popular demand in this community where we all come together to monitor the XAUUSD real time here during the New York session on the Sheriff Daramola's platform. So here we come to take positions, position ourselves for the next move, manage our existing positions. So you do want to be part of that session, and let's keep the energy going on that one. So click on the link, and if you have found this content helpful in making your independent trading decisions for today, I would really appreciate your support by giving this video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm push this video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so, and for those who had liked my video already, thank you very much. I really do appreciate it. So I look forward to your likes. Please like the video, support this project, and thank you very much as you do so. If you haven't already, I encourage you to follow me on this channel for more of this insightful content. By subscribing, you would get notifications whenever I upload new ideas, live sessions, and of course commentaries as they come up. Thank you for doing so, and I wish you all the best of luck today. So today so far we have been able to attend to three major assets today. Sorry, we attended to the USOILSPOT, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And on all of these assets, we were able to identify simple setup that we will be using to guide our trading decisions for the London and the New York session today. And I'm very confident that with the simulations we had this morning, we will be able to capitalize on any potential opportunities during the London and the New York session today. So let's see how the market will play out. Trust me, I'm going to be with you in the comment section of both my TradingView and Telegram platform as we continue to monitor price action. So I see your comment, Ika's Diary. Glad you found that useful, and I look forward to seeing you guys tomorrow. For those who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get in understanding how these strategies works, and eventually be able to use the information you gather here in this community to make your own independent trading decisions. So on this note, I wish you all the best of luck today, and I look forward to seeing you right in the comment section as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.